Hi everyone, hope you're all doing well, and today I'm going to talk about why investing into stocks or the stock market is actually easy money. Now, I've not done one of these videos where it's just been me, you, the whiteboard for a little bit and just kind of me talking to you guys, giving you guys some really useful tips on how to invest into the stock market and getting started into the stock market. And I just felt, it's time to do one. We've been talking about a lot of stocks at the moment recently, and I thought it'd be really good just to do a few education videos. And this is one that popped into my head the other day. I was kind of thinking, you know what, everything's kind of just got so hyped up recently that, let's strip it back down to basics. And one thing that I always feel like is like the stock market is made out to be this kind of like crazy thing that is really hard to get into and really hard to make money. But in general, if you're a long-term investor, it's actually really easy to make money in the stock market. And I'm going to go through all that with you today. So if you could, for just doing this video and sharing this with you guys, all I ask for is if you could smash that like button. That'd be absolutely amazing. And probably one reason why I actually don't make more education videos where it's just me, you and the whiteboard so much is actually quite often, I don't know why, but on these videos, and I'm kind of jinxing it right now, but normally when I do these videos, like the video kind of cuts off halfway through recording or the mic dies or something like that. It's so much stupid, but hopefully everything works out when you're seeing this video anyway. But we'll get onto this today. So the stock market and the stock market being easy money, I 100% think like the stock market is easy money. And I think one of the things that puts people off is it seems so hard, but realistically I'll break it down to you today why it's actually really easy. And so often people start shouting out about so many things that you need to look into, but realistically there's only a few things that you need to look into to invest into the stock market. And like I say, we'll go through all this today. Now, the one part I do think is the hard part about the stock market is increasing your return. Increasing your return is the challenge for me. Getting from 10% return, 20% return, or beating the market by 10% every year. For me, that is the tricky part. Now, you will get better as that the more you do it, just like anything in life. The more you do something, the better you get at it. And I think that's the tricky part in the stock market, but it's, like everything, it's in your favor. If you're willing to put time into it, if you're putting time in willing to learn, you'll get better at it. And I think that's something that is probably the tricky part, is that trying to improve your return is the hard part. But to actually make money, in my opinion, is really easy in the stock market as long as you do the right things. Because if you're a long-term investor and as long as you're buying great companies, the stock market, through history and just generally uptrends through history, if you look at the stock market chart, it goes up and up and up. Great companies go up and up and up, and the only part is just finding them great companies. And as long as you buy a great company, it doesn't matter if you buy at 52-week highs, it doesn't matter if you buy at 52-week highs before a 20% pullback. If you're playing the long-term game, you will still make money on them companies. The amount of times that you could go back and look at previous 52-week highs over the last 10 years of Facebook or Amazon or Google or Netflix or Apple, since then they would have all gone up and up, and that's the thing. So that's what I'm going to kind of talk about today. So the first part is the really easy part to invest in the stock market, and people just kind of always skip, well, not maybe people, me in particular, this is one of the things that I always skip past, is indexes. Now, before we even get into the stock market, if you don't invest in the stock market, if you don't buy stocks, if you don't buy indexes, what do? You have your money, have it in the bank account, it sits there, and what happens? You get 0.0025% interest every year. Inflation's going up more than that, and your money just decreases. Having cash sat there just doesn't do anything for you. Whereas realistically, that cash that you have sat there, you can go get that to work for you, that you could go get that to bring you more and more money in. And even indexes, which get overlooked slightly, indexes are so much better than just keeping it into a bank account. Whatever indexes you want to go for, if you want to go for an ETF, there's plenty out there to choose from. The easy one to always go for is the S&P 500. You put it in the S&P 500, I think the average return of the S&P 500 is 8-9%. 8-9% is still better than 0.0025% or whatever it is. It's so much better, and your money is then working for you and bringing more money in. A lot of people, and I'm kind of in the back of my head already, I'm going, you can easily beat that and you can get more and more returns, but at least do that. At least put it into an index or an ETF. You don't have to do any work. You're buying a bunch of companies there, and then a bunch of companies will go up in value and you'll make money, and it's better than just having cash sat there. So first of all, the first easy point is stocks are easy money, because all you need to do is probably go to one of these, look at which one you prefer, which one looks good to you, and the S&P 500, the Nasdaq, or an ETF, put it in there and your money will start working for you. And sure, there's places you could probably get a better return from, which I'm going to talk about, but if you at least do that, your money's now working for you, and then you get a better return on your cash rather than it losing value every year. So that's that's the really easy method of making some money and investing it into the stock or stock market. Now, the next thing is if you then go and do individual stock picking. This is what I like to do because individual stock picking gives you the potential to get more and more returns and outperform indexes. Now, even stock picking, in my opinion, is really easy. Number one, the one thing that 100% you need to look for is this: revenue and profit. Revenue and profit is the key. If you buy a company that has a history of growing revenue and profit and also goes forward and grows revenue and profit, the company is not going to be valued at the same as what it was or is. If it goes up in revenue and profit 5 years down the line, there's no way the company is going to be valued at what it was. It's going to go up in value. Now, there's going to be times where the stock price does not match where the company happens, but more than likely 5 years, 6 years, 7 years, 8 years, if your company grows profit and revenue, the share price will move up and move with it. And that's what will happen, and that's the key. As long as you find great companies that grow profit and revenue, the share price moves up, and it's that simple. That, honestly, if I could sum the stock market up, is that you look for companies with revenue and profit. Doesn't matter half the time, it doesn't even matter what valuation you pay for a company if you're in the long term. If you're in the long term, you can afford to overpay for a company and still make money on it if you're in for the long term, as long as it's a great company that grows revenue and profit. Sure, your returns might be a little bit limited because you might be buying at a crazy valuation, which we'll talk about in a little bit, but as long as you buy a great company, you're safe. Honestly, that is the number one rule I have in the stock market. Buy a company with revenue and profit growth, because that's what's going to attract investors. If a company is decreasing profit and revenue over the next 5 years, who's going to be attracted to buy it? Next up, like I said, that's definitely number one, but a growing sector. If you have a growing sector, that's always going to help your company, because if you look at a company, you're probably looking at what's the game plan and how they're going to achieve that. That's probably going to achieve revenue and profit. And also, if they're in a growing sector, that's obviously going to help it as well. Industries that are shrinking, slowing down, maybe not growing that much, are probably having a lot of companies in there that don't perform that well. So a growing sector always helps a company. Balance sheet. As long as you buy a company with a strong balance sheet, not that much debt, strong cash balance, you'll be pretty solid on there. That's one thing that you do want to check out. And management can make and break investments. You probably want to just make sure that what your management team are pretty good. You don't want to be investing into a company that is suggesting they're going to be the next biggest EV car, and then the history of their management team is having one company that kicked them out 2 years ago and they had an SEC filing against them or something. That's not what you want. Management of a successful track history of doing great things, or doing great things for that company already. That's probably something that would be really good. But the stock picking for me, those three are really important, but your number one comes down to what attracts investors, revenue and profit, and that's what that's what everything kind of people look for. As long as you find stock picking and find them sort of things, you buy companies with revenue and profit, that's what will really help you go up. Now, that's the easy part. This is how, buying index or stock picking, as long as you do that, you'll be absolutely fine. Now, the hard part for me in the stock market is when you kind of improve your returns and when you take yourself up to the next level. Taking yourself up to the next level is the difference between whether or not you get your average return over a 5-year period. A yearly return is, 10%. If you could take that up to 12%, if you could take that up to 15%, 20%, 25%, outperforming the market, that is the step up for me. That is how you improve as an investor, and that's the tricky part. And there's a few things that help you go on to that and help you improve as an investor. First of all, the one that I used a little bit earlier is that the tricky part, if you want to step up as an investor, is valuations. The difference between seeing a great company at expensive prices, the difference between a great company at average prices, and the difference from seeing a great company at cheap prices. And if you're buying a great company at cheap prices, and you see them opportunities and you start to work out which them opportunities are, that is the thing that will take you up to the next level. Finding great companies at cheap prices is where your returns start increasing a huge amount. Same as if you're getting an average company at great prices, you probably see an increase compared to if you're buying great companies at great prices, expensive prices. That's going to limit your returns, and that is probably from being the stock market is easy from indexes to just buying great companies, whatever valuation, it's easy money. They'll go up in long term. The stock market is bullish in the long term. But if you really do want to step it up a level, the difference there is just by finding out valuations and putting the odds in your favour and potentially giving yourself a better return. Like I say, as long as you could buy a great company at 52 highs and you'll still make good money on it. But if you could buy a great company at 52 close, you make even more money on it. Be early. If you can find an investment before other people do, and people wake up to this investment, you'll smash it. For example, Tesla. Tesla was a company I bought at $40. It's now $600. Noticed that they were smashing the EV game, and people eventually, Wall Street woke up, investors woke up and started buying it. InMode looked at that company and went, oh, this is a company growing at 30% revenue and profit rate, and the company is currently trading at like a 17 forward P ratio or something, insanely cheap. And as long as you start picking, and this kind of comes into like valuation as well, if you can find a disconnect between a company that's massively performing well and the share price is just like massively sold off, which happens from time to time, but eventually it will kind of balance in line. If you could spot them opportunities before everyone else, other investors, Wall Street, that is where you'll beat the game. That's where you beat the market and get better returns. So that's probably another thing that you want to be considering. The big thing is patience for me. This is on this list. When I said stop picking, revenue and profits key. If you want to improve as an investor, for me on this one is patience. This is a massive thing that people struggle with in the stock market. Patience. They can see what they think is a great opportunity, and they might hold this opportunity for 3 months, and the stock might not do anything. And sometimes people go, oh, that company's absolutely rubbish, what did I buy that for? Sell it. I'm going to go buy this one because this one's going up, and they go buy that. And then what do you know, the company that they just sold out of because they got bored of it because they weren't doing anything for 3 months starts going up. Sometimes stocks take a while for them to kind of balance in line and go in the right direction, but eventually the connect happens, and prices and share prices and the company performance come in line and they move up. And sometimes people lose this, especially in what we've had over the course of like the last kind of 12 months, where we've had a stock market that just went boom, straight up. And now we're kind of getting to a point where the stock market's kind of getting back to normal. 2021, the stock market's been kind of normal, and people are like, but the stock market doesn't do anything now. What's going on? And it's because people have had the stock market, the S&P up 60%. The S&P does 8% return a year. It went up 60% since like March 2020. And people are like, why is it not doing anything? Because this is normal. This is what happens. But what you'll have now is the S&P that goes up, 8%, 9%. But if you can find the great companies, they'll start, outperforming the S&P by, double that, maybe triple that, maybe even more than that. And people this is a big thing why people can't last in the stock market. They get bored of the companies not doing anything, or even more is sometimes if the stocks start going downtrending and like, oh, I ain't got time for this, I want to be a millionaire overnight. And if you've got that attitude of being a millionaire overnight, this isn't going to be for you. So that's probably one of the big things as well. And the last point is keeping up with your companies. As anything, the more time you put into something, the better you'll do. The chances of you being, if you want to be a professional football player and you train 7 days a week, the chance of you being a very good football player, or even a professional football player, is a lot higher. If you kind of train once a week, twice a week, maybe 3 times a week, the chance of you being a professional football player or a good football player is probably a lot lower. It's just as anything, the more time you put into something, the better you will be. And same in the stock market. If you put more time into research, if you put more time into keeping up with your companies, you probably start spotting things a lot more. You'll start spotting things that you see with a company that you're like, oh, I don't like that, so I might sell a few shares. You might spot a few things where you're like, oh, I don't know if the share price kind of realizes how good that's going to be. And then you go buy some shares, keeping up with them. There's a lot. What I said here is like, if you do individual stock picking and you just buy big market cap companies, big blue chip companies, Microsoft, McDonald's, Costco, a lot of them companies you wouldn't even have to do that much research on. You probably use them. The very stable companies, they'll just carry on going up in the background. But if you were wanting to get even more aggressive and get better returns, one of the things you're probably going to do is actually keep up with your companies. The companies that you probably want to see are probably not as well known, maybe not as featured in main media as much, and you might have to do a bit more research into them and go through earnings, and that is one thing that will go through earnings, conference calls, 10Ks for example, and that's probably the next step up for sure. And probably the 2 flags that I have where this is to do all this is really easy, but the 2 things that are that stop people from doing this is, obviously, this could have gone on this list, is patience, but hype. So often people get caught losing money in the stock market because they buy hype. You know, so often they kind of get, you know, they buy these companies and see them slowly go up and up and up. But every so often, hype gets the better of them. They see these opportunities where they see this stock and go, oh, it's up 100% today. Maybe it'll go up another 100% and I'll buy it. And they'll buy it and then boom, it's gone down. Or just getting caught in stocks that just have nothing, you know, like revenue growth or profit growth. They don't have that. They're just going up in value because they have, they might find a golden unicorn in 2 weeks' time. It's like that, and the share price is going up because of that. And getting caught in them sort of stuff, and that's, you know, every so often people kind of need at least do it once. People need to get burnt once to kind of realise, or every so often they kind of need a little bit of a wake-up call and go, oh yeah, that's why we don't do that. And hype's the most, getting caught into hype stocks is probably the biggest thing that can affect you, and the biggest way to not have easy money, really. And the other thing is panic selling. Like, the big thing is, like, I think especially in February time this year, is we had stocks that were going down, 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 and people panic sell. And people have to realise that's just part of the game. Sometimes stocks will go down, sometimes stocks go up. And if anything, when the stocks go down, those are the chances where you have, if you can find great companies, and this is where valuation comes in, and you start seeing the stocks that disconnect, you start seeing great companies at cheap prices. When stocks go down, quite often a natural instinct is to kind of go, oh, this isn't good, I'm going to sell it, and panic. Whereas the big thing in the stock market, one big thing to learn is the mindset of that when stocks actually go down, these are the best times to go buy, because then you are getting the valuations on all these that are so much better and you make more money, like what I said earlier. And what also happens quite a bit is that the opposite way is that, funny enough, when stocks go up, this is when people feel like, oh, I need to buy all these. And really that's the time where you should be a bit more cautious, and that's one thing. But overall, that's just a few pointers that I wanted to put out there that might help you going forward if you're wanting to get started in the stock market, or just a few tips that you might have forgot about or find a little bit useful there. But I just wanted to talk about this in general, because sometimes I think like the stock market kind of looks really hard and you get so many metrics thrown at you and stuff like that. But, you know, as long as you're kind of, you know, indexes, like I said, you know, in my opinion, are just at least do that. But stock picking in general, stock picking is really easy, even if you weren't bothered about, you know, valuations or anything. As long as you're doing that, buying, you know, revenue and profit growth companies, and, you know, growing companies, balance sheet, good management, you don't even have to worry about valuations. The stocks are still going to go up. But these are also the next steps up from there, and just a few don'ts in there that, you know, which stops people from actually making easy money in the stock market. So yeah, I hope it was useful anyway, guys. Maybe we'll do another one of these sometime soon again. And if you could, smash the like button. If you're new, subscribe. If you do want to know when I'm buying or selling companies, there's a link to my Patreon in the description, as well as some brokers if you do want to start buying some shares. And also on the Patreon, we do 2 exclusive videos a week, and also there's a Discord on there with 600 members. But that's the video for today, and I'll see you in the next one.